All right. Okay. Good morning, everybody, and welcome to today's live broadcast. Yeah, it's Tuesday. How has been our yesterday? How has been trading for us generally? Hope we manage our risk, which is very, 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 very important. All right. And I'm going to be giving us updates concerning the macro or fundamental. Okay, and between yesterday and today, nothing really has developed up, right? Except on the dollar that I think bar charts just released. I saw a release on barchart.com. Come in, let me get that right so I can let me get that right, guys. Yeah, Batchat just I got a release on Batchat I think 4 to 5 hours ago, right? That the speculators are now more bullish on the US dollar in more than a decade now. Okay, what does that mean? It simply means that speculate. When I say speculators, I'm not talking about retail traders like me or you. I'm still talking about speculators who who are more like the institutions, right? They added more bullish bet, which simply means that they are seeing a stronger dollar. All right, in more than a decade now, that means the DXY is going to probably going to skyrocket, right? Due to whatever reason they that is best known to them. You understand? And of course, they know what we don't know. You understand? Those guys have information to into what we do not have. You understand? So if they are bullish, if they are speculating that DXY is going to go stronger, of course you want to be where the big boys are. You want to be where people who have edge over the market are. You get so like I said, of course they know what we don't know, and then they know why they are. But nevertheless, I'm still doing my research to know why they are bullish because whenever I get an headline like this, my question is why. You understand? Maybe before the week runs out, I should be able to come out with a very, 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 very tangible reason as to why they are actually going on. Okay, on the dollar. Of course, I have my own parameters. I have my own catalyst for a while now, of which is the American fighting for the dollar dominance, and that is one of the catalysts I have. And since these guys are also much more getting bullish on their speculation, it gives me this kind of confidence on the dollar. And maybe before the runs out, I'll try and check the COT, which is the commitment of traders, to know if there's inflow of how do I call it, of orders, of buy orders in the DXY. So still talking about gold, right? Yeah. I'm still much bullish on gold. I'm still holding my position on gold because, of course, the how they call it, the China that trying to no the China that cancelled or trying to cancel the paper trading from gold. So now, if you want to trade gold, you have to trade it much more physically, right? And then also their regulation when it comes to the gold perspective, right? And also the Asia stuff as well. So it gives me and still boosts my confidence when it comes to gold and also Bitcoin. Like we analyzed yesterday, until the Clarity Act is being passed, I'm sitting on my hands, right? I'm not doing anything on the Bitcoin. All right, I'm sitting on my hand and also looking at NZD, right, the New Zealand dollar. I am speculating on a bearish NZD because of the high inflation they are currently facing. The election is by the corner, and also their interest rate decision is still by the corner. All right, so that is a hit, a very, very, very strong hit for the NZD. All right. And then also, like we don't trade. Most of us don't trade wheat, so there's no need for me going. But the wheat market should experience some bump. Okay, that if you have a broker that offer that commodity, you can also look into that to short the wheat. You understand, because of the Ukraine or the whatever. Since most of us don't trade that, I don't want to go into that. And also the US 30, right? The US 30, I I'll be much more bullish. Sorry, bearish on the US 30 for now, right? For now, because of the top seven company in the US. I'm talking when I talk about the US 30, we have the top seven inside the US 30, right? All right, because of what is happening there. But then I'll still be looking at them and then to know the updates and what is really, really going on in that particular aspect. So that is what I have on macro for today or for this morning, right? If there's any development uh before the New York session, then of course I will update us during that period. So that is it for the macro perspective, guys. Hope you're all good and hope we enjoy our morning and this life. What's good, my guys? If is that FS Queen there? Good morning. How are you doing?
All right. Good morning, everybody. Am I audible?
Yeah, you're clear. Your voice looks so malicious this morning.
That's because I slept quite early last night. I was actually surprised. I just dozed off while walking. So, anyways, good morning, everyone. I hope you guys enjoyed your night rest yesterday. So let's get into it. Thank you very much for that, V. If you're active this morning, just drop active in the comment section. Just drop active for me. Just drop active for me, guys. All right. So let's begin. Now, so this morning we're gonna look at some pairs. All right. Look at some pairs together and see what we have. Okay, let me share my screen. Let me share my screen. Let me share my screen. All right, guys. So if you can see my screen all clear, also let me know. If you can see my screen all clear, also let me know, guys. Come in. Okay. Now I have this swing trade on Odd NZD. Sorry guys, give me 1 minute. Just give me 1 minute. If you are here to share the live link, please share it across. I would love to get a lot of persons on here. I would love us to get to 100 active listeners. That would be massive. And once we get to 100, I have something for the 100th person. Don't worry, I'll know who the person is once the time comes. Okay. So let's share the link. Let's share the link so you can be able to have other persons to come on. Okay. So let's share the link. Now I've had this swing trade on Odd NZD for a very long time, and I'm still holding it. Okay. Now I also have a trade. Now I like I said, I'm a swing trader, but I also day trade. So I have a day trade on gold. I have a day trade on gold. I have a day trade on gold. So you can literally just hop in, but please use managed risk. Now gold is just I'm just taking this trade, all right, based off how because I the way I swing trade is different from the way I day trade. Do you get my point? So my swing trading strategy is different from my day trading strategy. So I'm currently on this gold buy this morning. So this is where I'm targeting for the high. This is my stop loss. So I'm just going to give you just one thing, or rather two things that made me to take this particular buy right now. So the first thing is the daily time frame. I remember I talked about this CRT right here. Okay. I talked about this CRT right here. Sorry guys, 1 minute. I talked about that CRT right there yesterday. All right. in the sense that gold took out this candle's low. Okay, took out the candle's low, and the candle high is the target, which is all these highs right here. If this high is taken, this high should also be taken as well. Do you understand? So we're still inside this range. That is the reason why I'm buying gold. This buy can be invalidated, but as long as it literally ticks my boxes, I'm taking the buy and I'm setting the risk. Do you understand? Because when you're trading, you need to be able to manage your risk per trade. No trade is 100% accurate. Do you understand my point? So if you're going to take this buy with me right now, just manage your risk and will accept whatever the outcome is. Do you get my point? Now this CRT, the candle low has been taken. I'm still inside this range. Now if you see what happened yesterday, now this yesterday now served as liquidity because this is what I trade. You guys know the pattern I trade, right? This is what I trade. Do you get my point? Now this candle, that's yesterday, that was Monday, it served as liquidity for that structure on the H4 time frame. So this was Monday's candle that served as liquidity for the H4 structure, and this is currently Tuesday's candle that came into Monday's structure, right? So that is just the reason why I took this goodbye. Now I don't normally trade gold. Uncommon and V knows I don't trade gold. Me and gold we don't align, but as long as I saw something good, all right. So I'm gonna take the buy, and the buy is with minimum risk. I'm not really expecting much from the buy. So if you want to hop in, also use managed risks. All right. So that is the two examples, and this was another reason why I took the trade. It has my rules for CRT. My rules for CRT. These are just my simple rules for CRT. Can you guys still hear me? These are my rules for CRT now. Now, if you look at this here, this is a rule for CRT. Number one rule is it must be in line with the trend. Okay. Then number two, it must be coming. Sorry, hold on, guys. Sorry, hold on, guys. Sorry. All right, Vic, are you here? Are you there? Can you hear me?
Yes, yes, I can hear you very well.
It must be in line with the trend. Number two, it must react from a zone. Okay, that is the key levels. It must react from key level. Now it taught you guys key level, open and close key level, A shape key level, and what, and V shape key level, right? So it must react from any of those key levels whatsoever. The number three and most important rule. Do you get my point? Number three and most important rule is that it must have a breakout to validate it. It must have a breakout to validate it. You guys get this? Now, what do I mean by this? These are my rules of CRT, my simple rules of CRT that I've been using over the year. Okay, I've been using over the year, and it has actually helped me to be able to understand valid CRT to trade. Okay, so now if you have a CRT candle, now I gave you guys a color code for a bearish CRT. That means if you want to sell, you need to have a bullish, bearish, right? And then for a bullish CRT, you need to have a bearish, bullish. Now for gold instance, we had a bullish candle, okay, and now this bullish candle now served as a trading range. Do you get my point? Served as a trading range. Now we now had a bearish candle that came to sweep this bullish candle's low. That is this low right here. It came to sweep the low. Now when price swept this candle's low, okay, let me change the color. So when price swept this candle's low, okay, we now had our second candle. Now, this particular candle, my own is that the first and the second candle should be the one reacting from a particular key level. Do you get my point? And inside the second candle, I want to see this. Inside that second candle, right? I want to see this. Now, this is going to be like this. This is a sweep. So this candle comes and sweep. Then that second candle should be the one to do what, do the breakout. This second candle should be the one to do that breakout. You get my point? You should be the one to do the breakout. And once it gives the breakout, then the third candle now comes. The third candle now forms, okay? Probably it comes at the key level there, or sometimes it comes at, because every CRT that price presents always leaves a V shape or A shape key level. I'm going to show you that in a bit. So that candle now forms, the third candle now forms. It's a third candle that now reacts from a particular key level and then buys or sells to the opposing direction. So first candle creates the sweep. Do you understand? Second candle comes, or rather, first candle creates a structure. The second candle comes and take out the sweep and break. So the second candle that there is even more work because it has to do the sweep and the breakout. Then the third candle just comes and tags and goes. That's just how I took my gold trade. And let me explain to you. That's why I said a breakout should happen to validate it. If there is no breakout, it doesn't validate my CRC for me. So let me just show you a bit. Okay. Sorry guys, hold on. Alright, I'm back guys. Sorry for that. Sorry about that. I'm back. Alright. So as I was saying now, okay. Okay, Sahib, good afternoon. Have you reached afternoon? Okay, good afternoon. I think we're different time zones. Good afternoon. All right, so now look at gold. Yeah, let me clear this out for you guys. Let me clear this out. So I'll just show you why I took this trade. Let me clear this out. Now, the first rule is what? CRT must react from a key level, right? Where is gold currently reacting from? From this open close key level, okay? And then this second candle was the one that did the reaction. I love CRT whereas the second candle does a reaction. Okay, now this second candle did a reaction and it's literally inside this trading range. It's inside this trading range. So second candle did a reaction. Then I will need to go a time frame lower. So on the daily time frame, so let's hop on to the 4 hours time frame. Okay. Now the 4 hours time frame, what do I stand to look out for? A breakout. And because price swept the low, you should obviously see a what? A sweep and breakout. Now what can you see here? A sweep and breakout. Now, even if I've seen this sweep and breakout based off CRCO, I won't take any buy until my liquidity has been formed. Because this is what I trade, guys. Like I told you, this is what I trade. I trade this. Do you understand? Then I buy. Until I've seen this formation, I won't have been on this buy. Do you understand? This liquidity even validated the buy more for me. Now, if it's a liquidity, it was yesterday's candle being Monday that price used as liquidity for today. Okay. Now you can see sweep, the breakout, then the liquidity formed. Do you get my point? So it must be in alliance with trend. Now, right now, gold is consolidating, but that's why I said this trade is 50-50. You can sell, you can buy, but I'm just trading the buy based of what my plans right now that sticks my boxes because the trend right now is consolidating, like I said, but because of this structure, that's what I'm buying. Do you understand? If not, I won't have bought. That's what I'm buying. So this trade now is 50-50. So please manage your risk on this trade if you're taking it with me right now. All right. So now the price has reacted from the daily key level, giving me the H4 breakout, giving me a liquidity zone. Do you understand my point? And then we're reacting from a key level right here. So once you now find your liquidity, you ask yourself, okay, where is a place for me to get entries? So you cannot take any key level that is alliance that is in line with the liquidity. Those ones that are very close to liquidity. Now, if you use your line with markers, which key levels are you seeing here? See this key level right here. This was one I used for my entry. This key level and price just tapped and do you understand? So, anyways, let's see how the code buy goes. Yeah, I'm obviously going. I'm not the kind of trader that is afraid of losses. So, yeah. Well, I'm going to show you live. I literally took the trade on my account. So anything that happens, we move on. Do you get my point? So that is that for gold. Still holding the buy active on there. Still active on there. Still active on there. All right. Now for order NZD, I'm holding this swing trade, and my swing is really on BE. So I'm not even afraid of this pullback that's happening right now. The swing is on BE. Same thing with GA, also on BE. So whatever price I want to do, these two trades are risk free for me. Okay. So let's move on to other pairs. Is there any pair you guys would like me to look out for? Any pairs you want me to check out for you? Please let me know in the chat. Let me know in the chat. Do you have any pairs you'd like me to look out for? Any pair, any pair, any pair? Probably looking at a pair you want me to see if it's in alliance with what I'm seeing. Let me know. Let me check out the comment section. Okay. Good morning, everybody. Good morning. Good morning. I love the numbers on here. Let's keep it coming. Let's keep it going. Let's keep it going. Good morning. Good morning. All right. Please drop the pairs that you have. I'm going to be analyzing the ones I currently have in my watch list. But you can drop the ones that you would like me to look out for. All right. Let's have it together. Okay. You said JP225. JP225. All right. Let's see JP225. Oh, excuse me. So let's do a proper breakdown on this. Okay. I remember a few live sections ago, I mentioned that the anatomy of a candle is price has to come for a candle's low, okay, and then the next target is the candle's high. And I told you guys that this is gonna sell because we have a liquidity to grab here. So this is more like the internal range liquidity and external range liquidity, right? And price also has to come and fill that imbalance. It has to come and fill the imbalance in between these two candles. There's an imbalance there. So that's the price currently that's from JP225. So that's taking the candles low, it's going for the candles high. All right. So imbalance field. Let's go to the weekly and see what we have. Now the weekly time frame, what can you see? This the imbalance is also in alliance with a key level. Can you guys see this? It's also in alliance with the key level. All right. So the FVG is also in alliance with the key level. All right. Now let's go to the daily time frame and see. Very good. Now what can you see? I'm not going to take this buy looks nice. I'm not gonna lie, but I'm already in a lot of trades right now. I'm not that kind of trader that'll be taking trades every like plenty of trades like that. And my account right now is really taking a lot because if I'm not taking good, I would have taken this trade, but I'm currently on good. So my rule is one trade a day. You get my points. I can't take this trade right now. But just mainly looking at this particular guy right now, what I can say is this. Probably if gold buys and my trade is on break even, then I can take this buy. But gold right now is still at entry point. So monthly time frame JP225, right? Monthly candles low, taking the highs, the targets. Now I'm gonna take this trade. I'll reduce my risk on gold and split it in between the two. So this place is your liquidity level, right? Now you can see that FVG is in alliance with a key level right there. Now going to the daily time frame, what can you see here? This is structure. And if you can see the structure with me, guys, look at this structure right here. We have this sweep, we have this break, we have type A setup. Now, if you want to refine this key level based off entry points, that is zones, this would be your zone for entry. You get my point? This would be your zone for entry. So let me clear this out. This would be your zone for entry. So this is a very nice zone for JP225. Do you get me? But I'm going to wait for more confirmation. I'll wait for more confirmation on there. So I'm going to wait for more confirmation. All right. So when price comes here, so what I'm going to treat this price is going to be weekly reject weekly. So once price comes to the weekly key level, I wait for it to reject off this key level. Then give me a daily breakout. Then you can now start finding your daily trades on here. So when you have a daily breakout, you can start finding your daily trades on here. But let me add this to my watch list. We'll keep a look at it. I just want gold to buy a bit. I want gold to buy a bit so that we can be able to take another trade. I currently have three trades running. I just want to go to buy a bit, so I won't be because I have three trades running right now. I don't want to add another trade until gold has bought a bit. So let me see the. But this is what I'm looking at too. This is what I'm looking at. So let's see the comment section. Okay, Euro USD. Okay, you're asking for DXY. Okay, let me check out DXY and check EU. I've not really checked DXY. I know DXY is the one that validates the whole USD and all of that. So let's see. Let's see DXY. DXY, I think TVC. Yeah, TVC. Or which let's say which broker do you use? Because I'm trying to see which one is much clearer. All I'm seeing is choppy movement. Oh, they're all the same. Seems like they're all the same. Okay, let's use TVC. The first one is there. Okay, so DXY, based off yes, this is bullish. I don't even need to go much. This is bullish. I don't trade DXY, but what I'm saying, this is bullish. We reacted from an FVG here. Okay, we reacted from an FVG here, and price has this candle as the liquidity level. Can you see this? Price has this as the liquidity level. Now, like I said, I don't know if gold follows DSY or gold is a pair of its own. Like gold has a mind of its own, right? So if gold follows DXY, that means gold is going to sell. But if it does not, and gold is just based off vibes and inshallah, that means it's going to buy. Do you get my point? But that's why I say that trade is a risky trade. So just manage your risk on there. So this is reacting from a FVG, and the CRC is in play. And let's see if you have a daily breakout. This is a weekly time frame. Let's see if you have daily breakouts. Very nice. What can you see here? A daily breakout. Now this daily breakout tells you that okay, I am ready to buy, right? So DXY is gonna buy. We're gonna keep on buying up until all these highs are taken out. Do you get my point? So now let me just look out for Euro USD now. Let me look out for Euro USD now. Going to the monthly time frame on EU, I gave an exact point yesterday that I said EU is gonna sell. Now let's find a day trade. Now I'm ready to do day trading with you people. I think all the day trading was based from uncommon. So let me start the day trading with you guys. Don't worry, you guys will love it. Let me do day trading with you people. So what I'm going to do is I'm going to give you exact points that I expect price to react from. Okay. So it's left for you to find the entry models depending on how you trade. So now Euro USD on the monthly time frame has these bearish candles. Now, that thing to help you to find out your market buyers is if you see lots and lots of momentum candles to the down or to the upside, that alone should tell you that this pair is bearish or bullish. So before I finish my analysis on EU, if you have any other pair you want to look up for, just drop it in the comment section. I'll check it below. So this particular candle should tell you that okay, EU is what EU is bearish, and where is your target for this sell, this low? Do you get my point? Because this low serves as external range liquidity. Now going to the weekly time frame now, let's see if weekly is also in alliance with this. Now I told you guys that this particular place that price currently reacting from is what is the sell. That's where the sell happened, right? And then this CRT, it must be taken out. That's just the logic of price. It must be taken out. It must be taken out. Do you understand me? This low is the target, first target. This low is second target, overall target for the sell. So after a sweep and rejection, now you must have a daily breakout to conquer the whole thing, right? Let's check the daily time frame. Now what can you see on daily? A sweep and a breakout. Now on daily you can see a sweep and a breakout. Okay. Now that sweep and a breakout now also aligns with the weekly CR, the weekly rejection. Okay. The sweep and the breakout also aligns with the weekly rejection. Sorry guys, 1 minute. I have okay, just that one. The sweep and the breakout also aligns with the weekly rejection. Now, sweep, breakout, daily breakout. Now, that same daily breakout, I gave you guys 2 points that I expect that particular trade to react from. I gave you guys 2 points I expect that trade to react from. Now, can you see? There's a recent daily breakout right here. Can you see this recent daily breakout right here? This recent daily breakout right here. Now, I gave you guys two levels. This V shape, this inverse key level because it was a V shape before it became an A shape and all of that, and this particular A shape key level. Now I told you guys something yesterday. I told you guys that wait for Monday's candles to close and reject before you know if you're going to sell EU, because I said that if this candle does not reject the way it's rejecting yesterday, expect the next point of interaction to be this open close and price going to use this place as liquidity. I don't know if you guys remember. Who remembers here? Let me know. Yeah, I'll know who is active because I said that. So if you remember, just say I remember. So I said that if price now rejects, okay, but it doesn't close like a rejection candle, that means this place is going to be our next point of interaction. All right. So now what can you see here? A breakout. Now price reject from this A-shaped key level. That means you're going to expect H4 breakout. Now let's go to H4 time frame. So we're going to treat it like daily breakout, daily reject daily, then go to H4 now, find H4 breakout. Now what can you see here, guys? Go to the line chart. This is the external place I want price to come and take out. This place right here is the external liquidity, it's a external breakout. And you can see price have taken it out. So nobody should be buying Euro USD currently. Just be looking out for sales because what structure is in alliance with it, candles is in alliance with it, and what key levels and breakouts are in alliance with the sell. So now how can you find your entries? Now, like I said, the way I find my entries, I'll take the FIP tool and take it from premium to discount, right? To know the premium and discount levels. So now that simply means that I should find key levels inside this place. And I love key levels that aligns with FVGs because FVGs has to be filled. Price has to come and fill out FVGs. So let me go to the left hand side. What can I see? I can see some key levels right here. Let me pick out this one, right? I can see this key level here. This open close key level right here. So if I want to take any other trade on Euro USD, I'll be looking at this particular key level for a rejection. Do you understand my point? I'll look for that particular key level for a rejection. But just know that EU is going to sell overall, and this is our first target. This is our second target. So if you're on this sell, just hold the trade with pride and confidence. You get me? Because the only thing that's going to give you confidence in trading is when you already know the overall direction of price before it happens. When you know that okay, this price is going to sell based off not just because you're just thinking, you know the logic behind why it's going to sell and why it's going to buy. You're not just trading based off imaginations or based off predictions because we don't predict price right here. We usually react to price, and I'm currently reacting to what EU is telling me, and EU has given me what a weekly breakout. EU gave me a weekly breakout, okay. EU also gave me a daily breakout right here and a daily rejection. So this is a daily reject daily. And after a daily reject daily, you go for what a H4 breakout. So now you're waiting for H4 reject H4 right now. That's just it. You're waiting for what H4 reject H4 right now. Okay. So I can even see a H4 reject H4 here. And I see what price here. Price came back to this H4 key level here to reject from it. And let me see the 1 hour. Okay. So I'm going to see if EU comes back to this key level right here that I marked out to come for resale. And if it does not, no problem. Okay. So any other pair guys you're looking at, you want me to look out for you. But look at JP225. I gave an entry and an entry point. Okay. I'm expecting price to come here. I'm only going to take this buy if our gold has given some kind of good momentum to the upside. So gold, if you want me to take another trade, just buy. If you also don't want to take another trade, just sell. Just at least leave my entry points so I can set my break even. So we'll see this gold candle in the next 2 hours and 15 minutes. We'll see how it closes. I would love this candle to close bullish because what? It's also creating a H4 CRT. Now what can you see here, guys? Candle low has been taken. Candle high is the target. Because this CRT is not really A plus, but it's also telling me that okay, if gold wants to buy, it should respect this CRT low and continue the buy from there. So let's see what gold does. Buy or sell, we move. So do you guys have any pair you want me to look out for? Do you have any pair? Do you have any pair? Do you have any pair? V, is there any news, any macro you anything? Is there any news? Any
Regarding the what?
like gold? I feel like there's something that's gonna make gold buy or make gold sell. I don't know.
Yes, yes. I if what I talked about it this morning when I was speaking, and I talked about the paper trading that was cancelled, and also some institutions were buying gold, right? But I don't know their reason yet. I'm still yet to find out. But I saw that they were buying gold as well. But for me personally, one of the catalysts I'm looking at is the paper trading. You understand? Paper trading that China cancelled, right? So which means that gold will be traded physically, more in the physical in the market than how they call it, than just on the paper. So that's just a demand of gold, and also the regulation from China. You get that, so that will also affect gold, and also talking about the how they call it, inflation, right? The inflation data and the rest, right? It also will be a safe haven. Good also might be a safe haven for the investor. So of course there are catalysts that support. I've been on the buy since last week Friday, so I'm still holding.
Okay. All right. Cool. So we're all on the buy. So as traders, we just have to allow the market to do what they have to do, right? They can't control the outcome. The only thing we can do is manage the risk we take on each trade. So yeah, manage your risk, guys. My hands is off. Now it's left for the market to either buy or sell. That's the only truth about trading. Once you have a very perfect analysis, even if it ticks all your boxes, don't allow your emotions to come in play. Don't allow your emotions to trigger your trades. Just allow it to do what it just allow it to play out. Okay. So don't just put your mind on the trade. Just set and forget. That's my number one rule. Either I'm swing trading or day trading, set and what forget. As long as your risk is the risk you want to risk. Like if on a normal day you have $100 account, you should risk at least $10 to $5 on that particular account every single day. Okay, that's on rather on every single trade. You get me? But if you're taking lots bigger risk, that is when you won't be able to sleep. You won't be able to relax. You'll be just bothered. All right. So yeah, so just take the trade and manage your risk. Okay, let me check the comment section. Let me check the comment section. Someone said BTC. I want to lie, I'm avoiding that pair because anytime a pair hits my BE, I don't normally go back to it because whatever outcome it is gonna be. Anyways, let's see BTC. Okay, let me see weekly time frame. Alright, BTC finally sold. So let me take a day trade on this guy. He finally sold, right? I'm not pained by rates because I followed my rule. I'm not pained by rates. It's only a gambler that will be pained by the outcomes of markets, even when he or she follows their rule. I'm not pained by rates. Better days ahead. So we have a weekly reject weekly. Now we now have our what daily breakout. Now you guys remember I said that I wanted to see this daily key level get broken to confirm this bearishness. So now we have a daily breakout. Now look out for entries. I'll look out for entries. I'll look out for entries. Let me look out for entries. So now that daily breakout now. Let me mark out key levels that I want to see price react from. So let's mark it out together. Let me mark out key levels I want price to react from. Okay guys, 1 minute. Alright, I'm back guys. So now BTC has given us a daily breakout. Now these are the key levels I want to see price react from. Okay, I want to see price react from. Now let's go to the line charts. Now just look out for the recent breakout. That recent breakout. Now what can you see? This is a recent breakout. Now if you use line with markers, all right. If you use line with markers, this is the particular piece I want price to react from. So this is the recent place I want price to react from. So we have this recent breakout. This is a breakout right here. This is another one right here. Rather, we have key levels. This is a key level right here. This is another one right here. So just look at this place. Don't take any trade. Oh. This is a daily breakout. So what are you looking at for? Daily reject daily. As simple as that. Don't take any trades. Just allow BTC to come to us. Daily reject daily. Then I'm going to find entry. Let's see. Okay, okay. Let me see. Let me see. Okay. So let's see because I'm seeing an entry base of structure. I'm seeing an entry base of structure right here. So I'm thinking price gonna do this and come down again. Like I said, I don't predict I react. All right. So I'll come back to BTC again later on. So let me just check on gold. So gold, I see holding gold buy. I see holding gold buy. So let's see what gold gives us. But in the meantime, let me bring V on so V can be able to tell us what he has. V, are you there? V, are you there?
Yeah, what's popping? What's popping? What's good?
All right. Okay, those of you that dropped the comments, I'm going to revert it after V has spoken. Okay, I'll revert to your comments. So, V, you like to share your screen?
Yeah, can you hear me?
Yeah, yeah. You like to share your screen?
No, 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 don't worry. Just more of few minutes, just few seconds. Sorry. Um, am I audible?
Yeah, you're audible. You're audible.
All right. All right, guys. So I'm back again. I'm back to your mic, to the mic again. All right. So, real quick, right? I want us to do something real quick, and it's very, 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 very beneficial if you get your Jota. Let's talk. Let's talk, guys. And I think this will help us as a trader, right? A lot of people battle with this, um, and then by the end of the day, even with a good strategy, they end up blowing off their accounts. All right, they end up blowing off their account. Um, just give me 10 seconds. Let me put this in order. Okay. So, guys, like I said, get a pen, right? Get your pen, get your uh, journal ready. Let's discuss now. I want us to look to dive deep into risks and portfolio management. All right, risks and portfolio management. And please, I want us to be active under the comment section as well. Drop your question or any bullet point that stands out for you. You can drop it under the comment section, so I know that you are following the comment. I just want to make sure it is okay from my end. Uh, okay. First screen, am I audible? Please confirm if I'm audible, please. Can you guys hear me? Please be audible.
Yeah, V, did you call me?
Yeah, see, am I audible? I'm asking if I'm audible.
Yeah, yeah, you're audible. You're audible.
All right, so guys, I said let's talk about risks and portfolio management, right? Now, this particular session, right, is going to be a practical talk, right, for traders. You understand? Specifically for traders. So another this topic I'll be talking about the secrets to long-term survival. All right, the secrets to long-term survival. Now, most people believe trading is about finding a perfect strategy. You understand? A lot of people believe that, yeah, for me to make it in trading, I need to find a perfect strategy. But the truth is that that is not the truth. Right? Now, I want you to get pen and get your pen so that you can jot a lot of things this morning. You understand? You can jot a lot of things this morning. That's not the truth. Now, professional traders knows that risk management matters more than strategy. I take that again. Professional traders knows that risk management matters more than strategy. Look at me, right? Listen to me, sorry. You can have a strategy that wins only 40 to 50% of the time and still be consistently profitable with a proper risk management. All right? I will have to take that again. I want you to follow me, guys. You can have a strategy, like I said, right, that win 40 to 50% of the time and still become and still and still be consistently profitable with a proper risk management. And you can have a 90% win rate, right? You can have a 90% win rate and eventually blow off your account if you don't manage your risks properly or if you manage your risks poorly. Now, I want you to note this down. The goal is not to make money today. The goal is not to make money today. And I know someone will be asking them, what is the goal? Now, the goal is to still be in trading in the next 5 years. Please, I want you to listen to me. I want you to like follow what I'm saying. All right. The goal is not to make money today. The goal is to still be in trading 5 years from now. I have a lot of people who start trading together. In fact, let me even put it this way. The guy who taught me how to trade, the guy who introduced me to the world of, we call it Forex, but me, I don't call it Forex, right? I call it CFD. We'll talk about this as time not in this session, right? Maybe next week or this week, I don't know. But we'll talk about the difference between CFD and Forex trading, but and how they are related, right? The guy, like, back to what I was saying, the guy who introduced me to trading, right? Today is no longer trading. He has been in the game for before me for a very for like few years, if I'm correct. Before I met him, before I knew him, and then I saw what he was doing. Like, what is this? He explained it. He was like, this is forex trading. You buy, you sell. Blah, blah, blah. I was like, oh, I'm interested. The guy post with you normally used to post with on his WhatsApp status back then, and then I fell in love with it. I was like, I want to learn this, right? The way he was portraying it, it was looking like something that can give me money immediately. You get, in as much as I ended up losing my house rent. The first one I lost in this trading space, like the first real fund I lost, right? Or I lose whatever in this trading space was my house rent. Maybe I'll tell you guys my story some other time, right? Now that guy currently is not trading anymore. People I started with them back then, I met when they were also starting up their trading career. Most of them are not on track anymore. So the goal is not come let me the goal is not to make money today. The goal is for you to still be in the trading space 5 years from now, 3 years from now, 10 years from now. And for you to stay here for that long, it is depending on how you manage or how you learn to manage your risk. I'm coming, guys. Mm. Right? Sorry, guys. So for you, right, to stay long or longer in the game, it is dependent on how you manage your risk. So you can see that risk management is a very key element when it comes to trading. You get it's a very, very, very strong element when it comes. You can't like you can there's you can't do away with that, right? Like I said, you can have 90% win rate. In fact, a very crazy percent win rate. But if your risk management is poor, bro, trust me, you have a very long way to go. All right. Now, first of all, now let's come back. What is risk? Let's define risk. Let's be like, risk management. I'm taking risk. Now, what is risk? Now, I have there's a dictionary definition for risk. Okay, and I have my own definition for risk. Now, I want you to tag this particular lecture as part one. All right, because I know time will not. I don't have that luxury of time to explain all these things just in one. Just on one. How they call it? Just on one live talk like this. So we'll target part one. As time goes on, anytime I talk about risk management, it needs to be a continuation of what I started here. Right. So now I have there's a way I define risks from my own experience. Now we have the general definition of risks, the uncertain outcome from whatever, right? But for me personally, right, I defined risks, right? I define risks. Sorry, for me, risks is simply the possibility of losing money or something valuable. As simple as that. I take that again. My definition of risk, right, is the possibility of you losing money or something. Money is not something valuable, so let's just use the word money. So it's the possibility of you losing money or losing something valuable. Now you have to have this at the back of your mind that every investment carries risk. Every decision carries risk. If you wake up today and then let's say you feel, "Ah, I'm not going to work today, I just want to stay at home," it is still risky because who knows, the room you are sleeping into can collapse on your head and then that's the end. The bike you are taking, or the cab you are taking, or the tricycle, which is Keke Marwa, you are taking to your next estate or to the market, right, is also risky because you don't know what can happen. There's a possibility of you losing something valuable. It might be your money getting missing. It might be an accident. Anything can happen. So you see, every decision you make, right? Every decision you make carries risk. So in the context of what we are saying, right, in the finance context, what we are saying, every investment also carries risk. Either you are trading the CFD, you are trading stocks, you are trading crypto, you are trading commodities, you are trading whatever real estate. The risk never disappear. It is there. You understand? The risks never disappear. So your job is not to avoid risk. Your job is to learn to control the risk. I take that again. I can write it down. Your job as a trader is not to avoid the risk. Your job is to control the risk because those risks, they never disappear. They are there. You understand? They are there. So if I hear trader, see, another reason we struggle is because we are trying to, and most of the traders or most traders are trying to avoid risk. And that's why you see FX Queen talk about strategic hopping yesterday, right? FX Queen, I'm coming. Just 1 minute, guys. No, no, I need to put my phone on the end. I don't know if this. Sorry, guys. Just give me 1 minute. Just 1 minute. Let me just reply this person and we can get on our way. Right. Sorry, guys. So I'm back. So A lot of traders want, most traders want to avoid the risks. That's why you see FS was talking about strategy option yesterday, right? You get to realize that most traders, they're just changing strategy not because the strategy is bad, but because they just experience few losses. So they are trying to avoid those risks. They'll move from here, they'll move to there, they'll move for here, they'll move to this strategy. Because why? They are trying to avoid it. Of which, trust me, you end up giving yourself psychological problem because you can't avoid the risk. You only learn how to manage the risk. You only learn how to control the risk. You understand? So the risks will be there. And in this talk, right, I want to take my time and I will be giving us the kind of risks traders face in the market. You understand? The kind of risks traders face in the market. Now I want you to write them down. Number one, market risk. Yes. This is the first and the general one of the general risks we face. Market risk, the unexpected movement, the unexpected market movement. You might be on a trade. Let's say, okay, on our screen now we have gold buy, right? Everything is going fine, macro wise. Yes, we are bullish on the gold, of course, you understand. But that does not mean that something cannot happen that will affect the market. And if an event can happen that will just how will I put it, move the market opposite your direction, and then your position is messed up. And that can be interest rate decision, inflation data, war, political instability, the black swan event. These are macro events that can just mess up your decision. You get? So market risk is one of the risks traders face. You can note that down so you can begin to see the battle, the risks, the kind of risks you face as a trader. All right. Secondly is liquidity risk. What is liquidity risk? I'm going to give you a very simple definition, right? Liquidity risk is you not being able to enter or exit a trade effectively, sorry, or efficiently. I don't know which English to use. All right, or efficient. Sorry, guys. Just give me 1 minute, guys. Let me just round up this. Let me tell this question.
Okay, so before we come back, now a bit of information. So you guys that were here yesterday, I talked about the Funded Verse Creators program. So the Funded Verse Creators program is still active. Okay, so we are yet to conclude. All right, on those people that are gonna come on the program. So the program now is gonna contain traders that don't have the skill. All right, but rather, pardon me, that has the skill but don't have the capital. Okay, that has the skill but does not have the capital. So you must have an active community, not really big, but I said active community, and then also you should have an active X account. Even if you have low followers, but as long as your X account is active and you have good engagement, come on board. You don't have capital, but you have the skill. Show us that you are a good trader, that you can actually trade this account, get it to funded, and then request a payout. We don't deny payout here. Do you get my point? So the program is live. Check Funded First main account, the official account. Check the pin post up there. They're going to see the information on the program. All right. So V, are you back?
Yeah,
Okay, let me
can you
talk.
guys hear me now?
All right, I can hear you. Yeah.
All right, sorry, I just had to just attend to something real quick. All right, guys. So thank you so much, FSP, for that. So let's continue, guys. So I was talking about uh, leverage risk. Okay. So I say leverage risk. No, liquidity risk. Sorry, we're on liquidity, not leverage risk, right? What is liquidity risk? Liquidity risk is you not being able to enter or exit the market effectively or efficiently. You understand? And this liquidity risks always occur or usually occur during news, during holidays, or during or if you are trading, what they call them, what they call this thing, if you are trading exotic currency pairs. Do you understand? So that's another form of risk. Now that risk you trader face is leverage risk. Leverage risk. Now, one thing most people don't understand is that leverage is when you're opening a broker or your brokerage account, you see those things you select leverage. Some people don't even know the meaning of the leverage. They just select random anyone, anywhere below face, they just choose any leverage. One ratio 1,000, one ratio unlimited. Everybody want, I want one ratio unlimited account. The question is, do you even know what that leverage really means? One thing you understand is that leverage magnifies both your profit and losses. If you are using a very high leverage, right, and the trade goes to your position, you'll be happy. Oh man, I'm making a lot of money. But if that trade should reverse, right? If that trade should reverse, trust me, you will have a very, very big issue because your losses will be amplified. You will see your loss in 3D. You understand? You'll see your loss in 3D. So you need to understand the usage of leverage. Maybe one of these days really dive deep into how they call it. We'll dive deep into the calculation of leverage and how leverage really works so that we'll get a glean, right, and understand what uh leverage is. You understand? Most people don't even know that you can control your 100,000 position, right? That is if the market just move only just 1% against you. But then I don't want to go into all those maths now. Let's just continue on the type of risk. Let's leave that for another time. Another risk that face is emotional risk. You understand? And this is one of the most dangerous risk. Emotional risk. Now, I want to talk about emotional risk. Talk about revenge trading. We talk about fear. We talk about FOMO. We talk about greed. We talk about overconfidence. We talk about hesitation. And all those emotional trauma you face whenever you're trading. You understand? And one thing we should understand is that, or one thing you will later come to realize is that most blown accounts are not caused by the market. They were caused by your emotion. If you go back to your trade, read to yourself, go back to your trade for the past 3 months, you realize that most trades that hit your SL was not even because of the market, or most trade that was not profitable for you or you closed early was not even because of the market, it was because of your emotions. I was speaking to a trader I was speaking to a trader one time, and then he told me that my problem is I can't hold trade. I was on a trade, and the market I was on a buy trade, and the market was going to my direction, and then I have to run and close it. And I asked him a question: Why did you close it? It was like the market tricked me into closing the trade, bro. The market didn't trick you. That is you having identity crisis. We'll talk about identity crisis very soon, right? That is you having identity problem. You understand? The market didn't trick you. The market is just doing its own thing. The market doesn't even know you are there. It doesn't even know you exist. It doesn't even know that there's some. You don't even know about the money you put on the trade. It's just doing its own thing. So it is your own emotion that made you close that trade, not the market. So you need to learn how to control your emotion. It's called emotional risk. So you need to learn how to put that, how to subject your emotion, like how to put your emotion into control, under your control. If you really want to see the okay, now let's talk. Now we've discussed risk, right? We've discussed what is risk. Now let's talk about what is risk management. We've seen risk, we have understand risk. Now the question now is now what is now risk management? You understand? Now I love giving my terms and definition to things after I've understand what the meaning of that thing is. You understand? Now, to me personally, from my understanding and how long I've been trading for the past 7 to 8 years, right, and other business I've done, right, risk management to me is protecting your capital while giving yourself the opportunity to grow. Can I write that down? Can write that down, right? I take it again. Risk management is you protecting your capital While giving, or let me put it this way, risk management is you protecting your capital or something valuable to you while giving yourself the opportunity to grow. You get, for the last time, risk management is you protecting your capital or something valuable to you while giving yourself the room to grow. Now, when it comes to risk management, right? If you're a professional, you think differently. Okay, let me put it this way, the way you understand. A beginner trader will ask, or a beginner will ask, how much can I make? How much can I make? How I want to make one ratio 30. One, but and I'm not saying one ratio 30 or one ratio 5, one ratio that are not good. They are good, right? But as a professional, the first question you ask is, how much can I lose? If on the worst case scenario this happen, how much can I lose? And you see that one question, it changes everything. And that's why most times if you follow me on my X, I always make a post. Good money traders, how much are we losing this week? A lot of people will be like, God forbid, I don't profess negativity. I don't I laugh sometimes because if you are going into a week, you don't even know how much you are going to lose, then you have a very big problem. If you don't know how much you are going to lose for that week, right? For that week or the week that just started, then trust me, you don't have a clear structure and system that can help you survive long in the game. You understand? We'll come to that thing maybe in the part two on how to break down your risks, how to how will I put it? Portfolio and risk management together, how to integrate them together. But let's continue. Now I have how they call it, I have golden rules for risk management. Come here, guys. Let me use that. I have golden rules for risk management. Rule number one: never risk money you cannot afford to lose. I said, what? I told one guy this thing one time. He told me that me don't have anything I cannot afford to lose. Now, he was just being direct. He was asking me about trading and then we were discussing. He wasn't a trader. And I'm telling you that trading is all about one thing about trading is that you must not risk money you can. No, that's why I put I say only risk what you can afford to lose. And then he was like, no, me, I don't have anything I cannot afford to lose. You get that kind of person. Trust me, if he comes into trading with that kind of mindset, he will be messed up. He will be, oh my god, he will be battered, scattered, chattered. Oh, I'm looking for a very you get. So rule number one, my golden rule number one when it comes to risk management is never risk money you cannot afford to lose. Your rent, your school fees, your feeding fee, your electricity bill, the money someone gives to keep for them. Some of you have friends that trust you. How far guy, help me keep this money. I don't need it now. This is $1,000, right? This is 2 million naira, this is 10 million naira. Help me to keep it in your place. I don't need any time, and I'm giving it because I don't want to touch it. Now you with your let me use an a Nigerian language, right? With your ojukokoro, you now carry the money. My guy don't need the money now. Let me just put it in my trading account and see if I can make times two, times three of it, and then I refund it back. And then by the end of the day, you you end up that you end up noticing that you're already in debt of money you don't even like want to. No, it's not as if you use the money for yourself, right? Trading takes it away, and then you're in debt. The market does not care. He doesn't even know that you even deposited that kind of money there. He just moves and then moves on to the next. So money you cannot afford to lose, don't put don't put it in the market. Rule number one. Secondly, my second golden rule is risk a fixed percentage trade. What do I mean by that? Always have a fixed amount you are risking a trade 0.5, 0.3. Have max 1%. I can't tell. I don't know your risk appetite too, but to me, 1% is already a high risk. 1% is already a high stake risk for me. You understand? 1% is already a very high stake risk for me. You understand? So have a fixed percentage. If, for example, let me give us a. I don't want to say this. I don't wanted to say this here now, but let me just say it. If you are starting a week, right? Tell yourself something. This week on my prop account, I have okay. I have, let's say I have 10 example. I have 10% overall drawdown. Hmm? And then you ask yourself, how much am I going to lose this week? Let's say this week I want to risk 1%, which is the high risk stake for me, right? Example, 1% throughout this week. So what I would do is that based on my strategy, as a, if for example as a day trader, if you're a day trader, ask myself, okay, on an average, how many trades do I take in a week? You are supposed to take those. See, data are very important. We'll talk about data very soon. A lot of things right, that are pending talk that are pending, right? You need to have data of your trade history. Ask yourself, how many trades based on my data? Oh, there's a lot in my head, and I don't know how to say this. Based on your data, or based on my data, for example, how many how many trade do I take on an average? If I take example 3 trades in a week on an average, I will divide that 1% by 3. All right, because I know okay, on an average, give or take at least I should have like 3 trades in a week, example, right? So I'll divide that that high stake risk by 3, and then I will now diversify my risk. That's called risk diversification. I'll talk about risk diversification in the part 2 of this talk. I'll now diversify my risk into multiple what do they call it, into the different setup I get. You understand? So if sorry guys, so if I divide, for example, now if I divide sorry, if I divide how they call it, so I was saying something. If I divide 1% by 3, I think I should get about 0.3%. Or let's say if I should do a round up number, right? I should have like, let's say 0.35%, or let's say 0.4%. It's much. 0.3, let's just 0.3%, right? On each trade. So that gives me confidence that I already accept the loss even before the week started. Even if all the three setup, according to my data, right, all the three setup are going into losses, I already know how much I'm losing. So it will take me by surprise. It will be very even difficult for me to even grow an account, to even lose my profit account. That means if I'm doing like that, I have to take a lot of trades for me to blow off my profit account. Listen, if it is 10%, right? Listen, if it's 1% I'm risking in a week, right? What simply means for me to blow off my profit account, and let's say we have 10% maximum drawdown or 7% maximum drawdown, that simply means it will take me 7 weeks, right, to blow off my entire capital. And even if I'm going to lose by that 7 week, I've learned, right, from my losses. I've learned what I'm doing wrong. Because if I can take losses back to back for 7 weeks, then maybe I have a strategy problem. If my risk management is tight. You get now with that, you'll be if you can put this together, you'll be able to get feedback from your data, feedback on what you should work on. Most of you don't even know what they should even work on. They are just running in circle. And the reason you don't know what you should work on is because you don't have data of your system. You understand? Let's leave that. I'm not even go far, right? So my good number 2 is have a fixed percentage risk per trade. You understand? And then my three is always use stop loss. Mm, there was a time in my life I was not using stop loss, and the reason I was not using stop loss was because I was only funding how much I want to lose. Let's say, for example, now today I want to lose $100. I will just fund the $100. I will forget the stop loss. I just keep adding position. If the money go, it goes. That's the amount I'm willing to lose. You understand? But then, if you are trading a proprietary firm account, which is prop firm, you need to use stop loss, my brother. Even if you are managing investor fund or even your fund that's a big fund, you need to use stop loss. You understand? Always use stop loss. Tell yourself if there's no stop loss, then there's no trade. You get? So don't, that one is not something you cannot. It's something you're not even supposed to negotiate. Then my golden rule number four is protect your capital. Protecting your capital first. Your capital is your inventory. Without your capital, you are not. There is no trading. It's just like you going to the war. You're going to the battle of going to battlefield without a sword. That is death. Death on arrival. You are dead on arrival already. So your capital, right, is your weapon. Without capital, you are done. So your capital preservation should be one of your uttermost priority. It's very, very key. You understand? It's very, 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 very key. Now, let's look at some mathematics, right? I don't know I'm going to do this, or should I even leave this one for for I'll just leave it for maybe when I'm talking about level and rest, right? The mathematics of losing. For example, okay, let me just give us a glimpse. For example, now suppose you lose 10%, right? You need about 11.1% to recover. You understand? Let's say you lose 10% from your account, right? You need about 11.1% to recover. You understand? So supposing you lose 20%, you need about, let's say, 25% to recover, because it's actually like the ratio. Okay. And if you lose 50%, you need around 100% to recover. If you lose 80%, you need 400% to recover. And this is why, how do I put it? This is why preventing large losses is far easier than recovering them. Now that's why whenever you go into drawdown on your proper account, it is very difficult for you to come out. Because the more you go down, bro, the difficult it is for you, because the ratio for you recovering begin to spike up. You understand? So my time has been fast spent. I'm getting the warning already. All right, so I will try and like summarize everything because of time, and then we'll continue some other time. Another thing we need to understand when it comes to risk management is position sizing. You understand? Position sizing. Now, a lot of traders they have this issue of like, how would I put it? The all beginner traders or amateur traders be like, what lot size should I use? That is not a great question for you to ask. The question you need to ask is what position size matches my risk? See, your lot size, right, is dependent on three things: your account balance, your percentage risk, and your risk pip stop loss. That is what determine your lot size. Take that again: your account balance, your percentage risk, and your pip stop loss. Right? That is what determine your lot size. So position sizing is very, 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 very key. Another key thing to risk management is risk to reward ratio. You understand? Every trade you take should have a favorable payoff, right? For example, if you're risking 100%, $100, for example, at least 1:2, 1:3 should be a good thing for you. Like, okay, let's say 200, 300, $400. You're risking one to get times two, or times three, or times four, or times five, or whatever you're risking. You understand? The reason for that is that, let's say you go into drawdown, you still have something like to hold you till you bounce back up based on what you grow. You understand? So I just talked about risk management, all right, and I hope I hope we really, really understood everything I just said. Remember, I said we're going to talk about risk management and portfolio management, but my time is gone already. All right, my time is gone already. And maybe subsequently, we'll now begin to dive into portfolio management. All right. See, you now want to meet portfolio management and how it works when it comes to in relation with the CFD space, right? It is very, 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 very key that you don't miss that portfolio management class. Always turn up because when I'm going to talk about it, you might there will not be any announcement. You might just miss out of 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 that portfolio management series. So guys, I have to drop the mic here for FSP to pick it up from there. And I hope this session was really, really valuable to your time. FS Queen, what's in the hood?
All right, thank you very much for that. I hope you guys learned. There was something that V said that literally changed the way I thought about risk. Now, immediately he said, I just realized, wow, that is really true. Like, now imagine this particular gold trade, and let's say for example you're a day trader, right? And your account is having a 10%, or let's just say the normal daily drawdown 5%, and in a day you should not exceed 5%. But your day trading takes you to take around 3 trades a day. Now there's something he said that I call, I don't know if I'm correct, but just correct me if I'm wrong, V. He said something that if you want to risk an account of 1%, why don't divide it into three, and then as a day trader, you won't be moved in case you have three losses. That means you just lost 1% out of the 5%. What do you guys think about that? Like you have 5% of daily DD, that's daily drawdown, right? And you have 1%, you want to reach 1% or 2% a day, and you have three active trades that you saw last night and you want to take it today. Why don't you use 2% divided by three? So that if you end up losing in a day, you're not losing 2% in each trade, you're losing 2% in all the trades you calculated for that particular day. Now, this thing you just said just literally changed the way I think about risk. I think I want to take that into consideration in my next trade. But this one, I really risk my 1%. But anyways, thank you very much for that. Thank you very much for that. Okay. So am I still audible? Okay.
Yeah, you're clear.
All right, so you guys, we're still holding gold. Like I said, I can't take any trade until this gold either hits SLO, buys to its direction, right? And I don't like watching trades because I just don't like it. Do you get my point? So just because of this live session, that's why the gold is currently on my screen. And it's currently showing. So let's see how it goes. Manage your risk. We are really giving you a code on how to manage risk properly. He is speaking as from investor aspect. He's our investor on here. So please manage your risk. The investor has spoken. Do you understand? Okay, so I'm just going to do a little bit of talk. Now, we had a very, very nice section yesterday. And if you guys are really enjoying this section, just drop it in the comment section that you are really enjoying it. Do you get my point? Now, as a trader, yeah, there come a point in trading where where the losses will stop hurting. Like in the sense that you stop feeling bad about the losses you take. It doesn't get to you. Do you understand? Okay. Sorry guys, 1 minute. It doesn't get to you. Do you understand? And what starts hurting you is the person you're becoming. Now, it's not because you are losing money, it's because you are losing trust in yourself. Now, I said something yesterday. I said that the worst thing that can happen to you is self doubt. When you start doubting yourself, like this gold I'm taking, I'm seeing people that are selling gold and I'm buying gold, I'm not doubting my setup. My own is that I just come to the realization, the order. I accept that if it hits with my loss, it hits it and I move on. But when you start doubting yourself that I'm seeing gold sell in the TL and I have a gold buy, why don't I just join the sale and just leave my buy? That's one thing that's going to literally make you feel as a trader stronger than the losses you're going to have in the future to come. Do you get my point? Because if you start thinking that I need to be like taking like conclusion from other people, do you understand? You won't be able to have a mind of your own. Okay? You won't be able to have a mind of your own. Now, when you have a particular setup, As long as it aligns with your trading plan, take it without hesitation. Manage your risk on the setup and allow it to play out. SL or TP, you move. That is my golden rule. SL or TP, I move. Now, you tell yourself that you're only going to take one trade. Like I told you guys, I'm on currently four trades. I'm on gold. No, four trades. Let me check. Let me check. Is it four or three trades I am? Yeah, I'm on four trades. No, three trades. I'm not on JP225. I'm on Odd NZD. I'm on GPAUD. And I'm on gold. Do you get my point? Now, if you tell yourself, okay, today I'm only going to take one trade, do you understand? And then you end up taking four trades, and you promise yourself that you are going to also respect your stop loss, but you end up moving it. You see that after two losses for today, you're going to literally stop trading, but you keep on trading until that account, that small money that you deposit in your account is all gone. Like, why are traders like this? Why is it that you stop trading when your funds has finished? Like, is there a spirit behind it? I don't understand. You have $100 account, and normal risk on $100 account should be $5 per risk or $10 per risk on every trade. Do you get my point? But some traders will feel like they need to blow that whole $100 for their mind to be at rest. Okay, someone said he's selling gold. See, sell your gold and buy my gold. I won't close my buy because of you. You sell your gold, I buy my gold. I explain why I'm taking this buy. That's how I am. I'm not saying your sell is invalid. No, no, no. Please trust your setup. Please trust it. Do you get my point? Just manage your risk. That's just it. Like I said I saw people selling gold. I mean, I'm buying gold. If my buy hits SL, no problem. If it hits TP, also no problem. I'm not here to invalidate anybody's setup. I can't. You will never see me. You will never see me come on the TL and say I'm buying gold. If you are selling gold, it's gonna hit SL, this and that. That is childish attitude. That's really childish attitude. You will never catch me doing sort. If this gold buy hits SL and your sell wins, no problem. But if my buy wins and your sell hits SL, also no problem because buyers market has both buyers and both sellers. That's what we need to understand. Do you get my point? So now I will say something that why is it that traders will rather blow their accounts like that $100 that is in their account right now? They rather allow market to take everything before their mind now comes at peace or comes at rest. Like reasoning why? Because then you now close your laptop and then you now promise yourself that tomorrow, Wednesday, I'm going to be more disciplined. I will follow my rules. I won't break anything. When tomorrow comes, you still break that promise. Like, do you know what slowly destroys a trader? It is not your drawdown. It is not that minus 5% drawdown on your account. It's not the blown account. No, it is the broken promises you keep telling yourself every single time. It is the broken promise you keep telling yourself that I'm going to follow my trading plan, but you keep catching yourself off guard, not following that trading plan. Do you get my point? It is those promises to yourself that okay, today I'm going to be more disciplined. Today I'm going to take less trades. Today I'm going to do this. I'm going to do that. And before you know it, it's like there is a second person in one person. One person wants to be disciplined. Another person doesn't want to be disciplined. Now stay with me. It's like when you're hearing two voices, one is telling you enter more, enter more, enter more. The other one is telling you no, don't enter. You already risk too much. Just manage your risk. And you're trying to battle those two voices. That's how it is as a trader. Like now, I'm sitting on gold right now. One voice is telling me close gold is not going to buy. Another voice is telling me you have already risked. Just allow it to play out. That's how it is in trading. Do you get my point? Because every time you betray your own rules, your mind start believing something is dangerous. You don't trust in yourself anymore. Do you understand? Sorry, hold on, guys. Now, like I said, you start doubting yourself. And once your mind believes that, it doesn't stay in trading. It follows you every single where you go. You start doubting every decision you make in life, every daily decision you make. Because when V, can you hear me? V, can you come in? All right, so I had to go out and come in again. So just V, just complete it. Just revert if you can hear me. Sorry, I had to go out and come again. Just a minute, if you can hear me. All right, thank you for that. Okay. So as I was saying, guys, now I said that when you start doubting yourself in trading, it follows you every single where you go. Do you understand? You start doubting every decision you are making. You start asking yourself, okay, what if I do this and it doesn't work out? What if I do this and it doesn't work out? But your thoughts, you already had it planned before you executed it, right? Now you start moving your stop loss because you no longer trust your plan. Now this gold, for I'm going to be using gold as reference now. This gold, for example, even if gold nears my SL, there is one rule like V said, always have your stop loss. And I mean, my own rule is I will never move my stop loss. I will never move it. I said something yesterday that SL can be delayed but never denied. If this gold wants to sell, there is no point I will want to place this SL that is not going to reach. There is no point I'm going to place SL that is not going to reach. Do you understand? Because if I start extending my losses, extending my Excel, that means my loss is going to be big. Do you understand? But now you overtrade because you no longer trust that another opportunity is going to come. Even if gold does not play out, my dear, I will wake up and do the same thing again. Most of you feel like you want to make all the whole money for the whole week in one trade. Because this whole week, I've not seen any trade. It's only gold that is my first day trade this week. This gold that we're in. It's only my first day trade this week. And because today is Tuesday, I have Wednesday, Thursday, and Friday, and I haven't seen any trade. Do you understand me? Now you will not be having the mindset that let me just let me just take everything on this particular gold. Let me put all my money on this gold. It doesn't work that way. Because when you start over trading, it's literally going to mess up with a lot of things, mess up with your risk, mess up with your mindset, mess up with every single thing, mess up with your confidence, especially your confidence. Do you understand? Now, if you notice the pattern, everything is connected. Because trading has never just been about the charts. It has always been about the relationship you have with yourself. Okay? It has always been about the relationship you have with yourself. Now, most people think that confidence comes from making money. No, confidence does not come from making money. It doesn't. Confidence comes from you keeping your word. Because now let's leave trading. Let's come to real life situation. If my FS Queen tell you, let me say, if I tell someone, tell the person, I promise you, I'm going to send you this money tomorrow. I promise you that this money, before you wake up, you see it in your bank account tomorrow. And now, the person I now promise wakes up in the morning and doesn't see anything. How do you think that person is going to feel? Do you think that person is going to have confidence in me again to keep my promises if I make another one in the future? Because if I say, I promise you, I will do this, I promise you, I will do that, as long as you have promised yourself something, always keep to it because it is where your confidence lies. Because imagine two traders, the first trader makes $1,000 today by breaking every single rule he has. Another trader lose just $100, but he follows every single rule. Because most people is going to tell the first trader that he did it very well because he made more profit, right? But 6 months later, the second trader is the one that is standing. Because my dear, I will rather make my money from my rules I did not break than rather make money from rules I broke. Because if I'm taking trades that, for example, if I took this gold sale that I gave you guys that week and I made money from it, I will be pained because I did not follow every step of my rule. I took it outside my rules. Because if you do one habit, you do on that thing, you do on that thing, that's how it becomes a repeated habit over and over and over again. You won't be able to stop. You keep on repeating the same thing over and over again, it becomes a repeated habit. But confidence is built on discipline. It survives every losing streak. Even if me I lose 5 trades in a week, I'm not shaken by it because I knew the risk, I knew the trades, I knew my plan. I'm just normal. Because that is why professional traders, they don't celebrate every profitable day. You can never see me come and say, ah, thank God I made this today. Thank God I made that today. The only thing you see me post on my TL or post on my WhatsApp status is my withdrawals. I'm out to touch grass, right? I'm out to buy this, I'm out to buy that. I'm going. See, do not be celebrating all the winning days, because what will now happen when you have losing days? Will you be sad? Will you be down? Will you be like, don't allow your emotions to be tied to your P&L. Don't ever allow your emotions to be tied to your P&L, because they know that profit can lie. Eh? Profit can lie. Now imagine this. You have been this whole week, you have been in a winning streak throughout Monday through Friday, even next week, Monday and Friday, you are currently on a winning roll, right? Back to back wins. And then you now have one small loss. You start doubting yourself a little bit, to 10% doubt has entered. The next loss, 20% doubt has entered. The third loss, it keeps on coming and it keeps on coming and it keeps on coming. Now, because you had few wins before, you felt like you were invisible in the market. Come on. You feel like the market cannot touch you, Deji. Nothing can happen to you. The market cannot do anything to you. You feel like you're on top of the world. You have mastered the whole strategies. You are profitable because of your small winning streaks. My dear, market is going to humble you. Market will bring you down and tell you, I am the market. Now, it's me that determines if I'm going to go well or not. Because here is something that nobody's going to tell you. The market is not, is always what? It's always watching your habits. Because your account is going to reflect it. That's your MT5 history that most of you, because let's be honest, how many of you every end of the week you go to that MT5 history and check the losses and the wins, the blues and the red? How many of you do that on your MT5? Because you're probably impatient in trading, because if you struggle, you are not going to allow your winning trades to run. If you consistently look for shortcuts, you are going to be constantly jumping from one strategy to another. Trading doesn't just create your weakness, it exposes them. Trading is a mirror of who you are. It tells you this is who you are. It brings your bad habits in front of you. It brings it in front of you. Now, me before, eh, few years back, I was a very angry person. Like my anger was too much. They said they have to even carry me to church to go and cast the demon of anger out of my body. Like I was very, very angry. Small thing I was angry. Like it was very, very bad. When I started trading, I carried that same anger into trading, and trading told me that, my dear, if the pastors and the churches cannot heal you, I will heal you. I will chase the demon from your body. The day I carried the anger, I took trades, I lost. I took trades after I blew like 5 accounts. And this 5 accounts is not small money. Oh. I blew like almost 1M in each account. My dear brothers and sisters, that was the day I knew that this thing is not normal. Like trading is going to expose that habit in you. It's actually going to humble you down, because that is why most people spend years looking for the perfect strategy, while completely ignoring that the impatient mindset is what is holding them back. You don't need another YouTube video. You don't need indicate. See, my chart is very clean. Are you seeing any indicators? You don't need indicators. You don't need another mentorship every month. Stop paying for mentorship. Why do you think if I learn from FS Queen and it doesn't work, I will learn from V and it doesn't work, I'll learn from Uncommon? Why do you think it's going to work if you learn from another person? Just because that person is showing you back to back wins? Just because that person is showing you what he needs to show you? Because I can literally post only my wins and you will not know I had a loss throughout today. I can literally just snap a particular win and then post it and you will know I had a loss. Stop jumping from one mentor to the other every single month. You need to become the person who can follow one simple plan consistently. Because basic knowledge isn't what separates profitable traders from struggling traders. It is your execution. Stop being an architecture in the market. Be an executioner. Execute. Take the buy and sell. Accept the risk. Accept the outcome and move on. Because execution is important. You already know what revenge trading is now, yet you do it. You know why overtrading is dangerous, but yet you do it. You know what risk management. We are talking about risk management, but yet you still go against it. The problem is not about information. The problem is becoming the person that acts on what you already know. You know what is right, but you end up doing what is wrong. Why? Why do you do that? Because that's where the real work is. The truth is nobody can do that part for you. Me, I can teach you how to take my entries. I can teach you how to take trades, right? But I will never teach you how to be patient like I am. I will never teach you how to be disciplined like I am. All right? I can never carry my discipline and put it in you. That doesn't work. Do you get my point? Because it is not about the best strategy you have. Because every morning when you open your chat, you have just two choices. It's either you choose to satisfy your emotions or you choose to build your future. And these two goals are never the same. Your emotions want action, your future wants patience. Because your emotions want excitement, your future wants consistency. Your emotions want to recover yesterday's loss, your future wants to protect next month's profit. One decision is what builds your account. Choose the right one. One destroys it and one builds it. But you know the scary part is often it often feels the same in one moment because that is where discipline feels uncomfortable. See, if discipline always feel good, everybody will be successful. There's one thing I learned. I learned that you have to be uncomfortable to become comfortable. You hear that? You have to be uncomfortable to become comfortable because if, for example, you just finished school, right? You just finished NYS, you're trying to look for a job. But now imagine if you are living in a very, very luxurious house. You're having 3 meals a day. You're having this, you're having a person to call and beg at your call. How will you be able to thrive to find that job? Do you think there'll be any reason for you to find a job when you're having all this at just a tip? Like you won't be comfort like you won't want to do the finding of the job or because you need to be uncomfortable to be comfortable. But now imagine you are living in a face my face your apartment or in a one-bedroom apartment and you're literally lying on the floor on a bare floor and you don't have 3 square, you only have half a meal a day. Don't you think that is you being uncomfortable? I know that I need to do better to change my situation. Most people need to be uncomfortable to be comfortable. Do you get my point? Because sometimes discipline feels like ending the day with no traits. Even if it doesn't meet my criteria, I'm good and fine. That is okay. Because your job is not to trade every single day. Your job is to make sure that you are still in the game till next year. That is why most traders quit. Because it is best I don't trade and my capital is still intact than to trade and my capital has gone and then I will not see a profitable trade. Do you understand? And then you now say a profitable trade, right? And then I won't have any capital to take the trade with. Okay. So let's end it here, guys. Let's end it here, guys. Now, this particular gold trade we are currently in, just allow it to play out. Do not just allow it to play out. Anything that happens when we come the next section, we are going to look at it together. I can see Nolly said he has a weekly rejection and is selling good. Okay, he's selling good, he has a weekly rejection. So no problem, Nolly, hold your sales. I hold my buys. I'm not telling you to close your sale. Don't feel like because I gave the trade, you're gonna close your sale, right? Hold your sales, I hold my own buy. Just don't be pressured by closing your sale. Hold it. Whatever happens, we move. If I'm the one that hits the loss, no problem. If you are the one, also no problem. All right. So V, are you there? Okay, I can see God. I'm the one. Is that first screen talking? Don't mind the chat color. I still on Commons chat. Don't mind the chat color. I'm the one that is talking. Is that first screen that is talking? Okay, V, are you there? If you're there, just let me know. All right. So we just Okay, yeah, V, I'm back.
All right, all right, all right. Good, good, good.
Okay, so sorry I hopped out there. V, did you have anything for us? Probably I missed the info you dropped before I had network connection. Like, did you say anything before I went out? Probably I missed it out. Did you say anything? Is that okay? Chilla said, "Let the market decide who win." V, V is like we have a war here. We're trying to see who wins between the sellers and the. I can hear the V. Okay, so
Just fully over as the market of people are still making money.
yeah, yeah, I'm not in competition with anyone. Don't feel oppressed, to don't feel oppressed. Like, see, let me just tell you the truth. Fuck the dolo. I'm a trader, you're a trader. Do you understand? The only thing that differs is my portfolio and your portfolio. You get my point. Just take the trade. The market doesn't care if I'm a very rich trader. It doesn't care. You get me? Don't feel oppressed. Do you understand? Just take the trade. So yeah, we have just 1 minute out before we close the section for this morning. Now, like I said, we have the Funded Verse Creators Program. So the Funded Verse Creators Program is for traders who has a skill but doesn't have the capital. So if you are that kind of a trader, please check Funded Verse official page, check out our pinned post, and you're going to see the informations there. Follow those accounts, all right? Um, Join our official Discord link, all right, and also fill out the form. Once you fill out the form, go to the comment section, still on the X post, and let us know why should you be a candidate. Then we're going to select and we're going to announce our candidates this week. So stay tuned. And if you are lucky to be a candidate, you're welcome on board. All right. But if not, you will have another spot again next month. So please and please and please make sure you are active. And for my active listeners, I'm not forgetting about you guys. You are our VIPs. For our active listeners, we have something for you this week. By Friday, our active listeners, we're going to be doing some few giveaways for you guys because being active every single day, it takes a lot, and we should appreciate you guys for that. All right. So it's currently 10 a.m. Nigerian time, WAT, and we're gonna be ending the live right now. So, like I said, we're holding this gold buy. I'm gonna see the updates when I come next by 2 p.m. So, buy or sell, we shall know. So, thank you guys and do well to enjoy the rest of the morning. Have your breakfast. And we're gonna see you right here by 2 p.m. on the dot. So, don't be late, be the first to be on the line, and we see you. Have a nice day, guys.